Okay. Good evening, everybody. Once again. So, as I said last week, I said I'm going to solve a POL question on group on foreign subsidiary. But when I started checking past question, I can only see one, which is was it November 2024? Yes, it's in November 2024. However, that question is very, very long. So I think we can do that one during revision. So I just thought that when I saw this one, I said, I've not seen this type of question before. Even when I was doing ICAN, I didn't see foreign subsidiary and fellow subsidiary together. So that's why decided that we should solve this question. So please, are you still seeing my screen?
Yes.
Okay. So now let's start. Um, let's just read the question together. Then we can now pick it after the other as we usually do. So Rapuya. Okay, Rapuya PLC is a Nigerian PLC company operating in the mining industry, right? So the drafted statement of financial position of Rapuya and its two subsidiaries. So as its two subsidiaries, we all know that it is either foreign subsidiary, is either fellow subsidiary or sub-subsidiary. So this question, we don't know. So ICAN examiner can set foreign and sub or fellow and sub. So there is wala on ground though. But now let's go. So but we found out that one of the subsidiaries is a Nigerian company, while this one is DEFA, which is so now let's see it together. Now the following information is relevant to the financial statement preparation, right? So on 1st May 2016, Rapoya acquired 52 ordinary shares of Soma, a foreign subsidiary. So we have the information now. So that Soma is a foreign subsidiary. The retained earnings on this date was 220 million DEFAs. Then the fair value of identifiable net assets as at date of acquisition is 990 DEFAs. The excess of this net asset is increase in value of non-depreciable land. So in this information, we know that they gave us the fair value of identifiable net assets. So in this excess, are we going to calculate depreciation? Yes or no? Let's establish that first. Are you going to calculate depreciation?
No,
No. Thank you,
because
man.
it's
So we are
land.
not calculating. Yes, it's land. So they even told us that it's non-depreciable land. So now number two, require which is to use full goodwill method, right? To consolidate the statement of financial position, the fair value of NCI. So they give us the fair value of NCI at that acquisition. So the group's policy is to measure full goodwill. Now, there is something I want to quickly ask now. If we calculate exchange gain on goodwill, does it belong to only parent or parent and NCI? Hello, are we together? I
Only
ask,
parents.
Miss Adiola, are you here? What about you? Let me hear your own voice too.
It's parent and NCI is assuming it's for non-assets, net asset
Proportionate
proportionate is
net
that
asset.
one that we use
Yeah.
for only parents. But
Okay.
this one, since it's
So
full goodwill, to be
goodwill.
parents and NCI.
Okay, thank you, ma. So, Mr. Falashade, I know you have remember. I know you can now remember now. I know you have forgotten before. So that is it. So when it is proportion, in fact, it is very, very easy to remember. Anything that is proportionate belongs to only parent company. But when it is
But
full goodwill, it belongs to both of them.
that proportionate sounds like you sharing something now.
Proportionate. It's the
Eh,
sound here. Let's do it like that. That sound. But you are not going to look at the sound. Please
so that
don't
means
look at that
you
sound.
are doing opposite of what they wrote there. If you say something is
Exactly.
proportional, that means you are prorating it now. Why would they now use
Eh,
food building for proration? I mean, I don't understand.
So please don't use don't use the English. I know it is English. Please don't use the English. When it is
Okay.
proportionate share of net asset, it belongs to only parent. But when it is full goodwill, just remember that full it belongs to both of us. So that is it.
So
And
that
let's remember
proportionate, all the goodwill, all the impairment, everything is only for parents.
everything pay only parents, only parents. That is it. Only parents.
Okay.
Only parents. So that is it. That's just it. So okay. Now let's go. Let's go. That's information. Now they said Soma Limited is located in Tome, a small country in West Africa, and operate a mine. The income of Soma is denominated and settled in DEFAs. Now, the output is routine traded in DEFAs. Its prices are determined initially by local supply and demand. Soma Limited pays 30% of its cost and expenses in Naira, with the remaining being incurred in local and settled in DEFAs. The Soma management has considered the degree of authority and autonomy in carrying out the operation of Soma Limited and is not dependent upon group companies for financial support. The financial controller is not certain above whether the DEFAs or Naira should be taken as functional currency. Now, that is what I said earlier. I said it that please let's take note when we are talking about uh when we are talking about foreign subsidiary, IAS 21 comes in. IAS 21 and foreign subsidiary, they are together. They usually hang around together. So this question now, they are saying how can we determine the functional currency of the company? If you remember when we did IAS 21, I said IAS 21, when they are testing IAS 21, there is no way they are not going to set um determination of functional currency. There is no way. They will always and always do what? Always and always test IS 21. So now if you look at that information, they are asking that what will be the functional currency of Soma? Is it Naira or dollar? And it is very simple. When you remember IS 21, IS 21 says that when you want to determine the functional currency of an entity, you must determine three things. Number one is the sales price. What is the currency in which the company is trading? That means how is it settling its sales and payment? Is it which currency? So if you look at this information, they said income of Soma is denominated and settled in SEMA, in DEFAs. Can we see now? So that information, number one, is telling us that one recognition criteria has been met. Now, the output of the mine is routine traded in DEFAs and its prices are determined in local market. So with all this information, they now told us that Soma pays 30% of the cost and expenses in Naira, why 70%? Automatically, when something is taxed, automatically the rest will be 70 is in DEFA. So when you look at that information, you see that the financial controller has not read IES 21 very well. Because if he has read if he has read IES 21 very well, you know that it's very clear that DEFA is the functional currency, which is straightforward. Now, and that is the information they give us. Now, they now give us additional information too that Upaya acquires 70% of equity shares. They purchase consolidation. This one is foreign subsidiary. This one is foreign subsidiary. So now they give us the relevant exchange rates for preparation of group account. So now let me quickly ask question. In this question, are we dividing or multiplying? Are we dividing or multiplying? We need to determine, are we dividing or multiplying? They said differs to 1 to Naira. They now say 3 to 1. Yes. So which one? Which one? Are we dividing or multiplying? We are multiplying or dividing. So according to how we usually determine what is the first step when we want to determine
which one is one unit?
Which one
is
has
Naira?
one?
Yes.
Naira. So is Naira the functional currency of the parent or foreign currency of the parent company?
Naira is
Naira
the functional.
is the functional currency.
Naira is a functional currency. So if Naira is a functional currency, are we going to divide or multiply?
Divide.
Divide. So that is just the step. Just take it one after the other. One step at a time. One step at a time. Number one, which one is expressed in 1 unit? Number two, which one, that one that is 1 unit, is it functional currency or foreign currency? If it's functional, divide. If it is foreign, multiply. Okay now. So it's something that even in our dream, it's something we should be remembering. In our dream, we should be remembering. So it is not something that is very, very, very hard or something. So that is it. So now what is the requirement? In requirement A. Requirement A is what? Requirement A, let me scroll down. Advise the financial controller on what currency should be taken as functional currency, which is very, very what? Which is very, very clear. We all know that it is DEFAS that will be the functional currency of Soma, Abi, which is the foreign currency. So that one is clear. Now, our B is the major thing. What is the major thing? They said prepare the consolidated, which is and show all workings, 25 marks. 25 marks. So now let's move to. So I've sent the question to your group since. So Mr. Falashade, you help me take a good look in that group so that when we start talking about the additional information. So let me present my Excel now so that we can start solving it. So the question is actually, let me show my Excel. This Excel every day is wahala. Every day is wahala for us. What's this diet exam first? What's this diet exam? Is it not May 2017?
Yes, May 2017.
So let me just May 2017 question 1. Foreign and value subsidiary. Foreign and value subsidiary. So our step one, maybe we remember very well that our step one is to do what? Our step one is to first and foremost translate. So that's our step number one. That's our step number one. Okay. Just give me a minute, please. I'm trying to close that Excel. Then I'll now open it back. So if I open it back, then I can present. This Excel is a thorn in the flesh. I don't understand it. I don't know. In fact, it is wahala in my
Sorry.
I don't know. Every day. Shebi is every day.
What version
What
are
did we
you?
do the last time? I'm trying to share my Excel.
Okay.
My Excel sheets. So and it's not sharing.
Maybe he wants you to
So
use board.
don't know. I don't understand. And if I share this Microsoft, if I share this Microsoft Word now, it will come up. Can you imagine now? Should you are seeing my Microsoft Word, right?
Yes.
It will come up.
Maybe he
But
wants you
this
to
Excel,
write on the board instead of Excel.
like, I don't understand. Don't understand. But me, I actually believe there is something. So maybe he wants us to be when we want to start class, so we should now be imagine, imagine. So immediately I share that Microsoft Word and I close it, then it now came up every day. Hey, don't shout me wow. All is well. All
Yes,
is well.
well,
All is well. So okay, now let me brighten my let me enlarge my screen because of when we are looking at the recording. So now, Mr. Folashade, can you give me the figures of uh, the financial statement of Soma?
okay,
The figures.
PP
We have PPE. How much is it?
760.
760. A million, right? Yes.
Yes.
Million. Let me just a million. So a million. So this is Naira. This is Naira. So now this is okay. PPE, we have 760,
Mm.
right? Now,
Yes.
what's the exchange rate? Exchange rate at our DOC. What's
Yes.
the exchange rate at our DOC and DOA? DOA. Help me check the question, please.
DOC, DOC April 30, 2017.
Yes.
2.5 is to 1. That's
2
2.5.
DOC
2.5.
Abi
Yes.
2.5. Okay. What about DOA?
DO is 3.1. 3. I mean
Is it
3. Just 3. 3.
3? Okay, that's fine. So now our exchange rate for translation of PPE, for translation of asset and liability is DOC, right?
Yes.
DOC. So now we have PPE. Now, what's the next item?
Um, Financial asset.
Financial assets.
100.
Financial assets. 100, right?
Yes.
Okay. The next item,
Current assets.
current assets. Okay. Okay. What's current assets?
660.
660. Okay. Now after that, we now have
Total
the equity, right?
total
Yes.
assets.
We don't actually need that for our translation. We don't need
Then
that. Okay. Under our equity now,
share capital.
we have share capital. Okay.
400.
Ordinary. Yeah, okay. Let's just pick share capital. Share capital 400.
400.
So when we usually translate share capital, is it going to be a DOA rate or DOC rate?
DOA.
Share DOA rate. So please don't let us sleep over it. So DOA
Return
rate, which is
3.
3.00, right?
Yes.
Mhm. Then we have retained
Return earnings.
earnings. So under our retained earnings, we usually have, based on
Pre
our approach, we have
and post.
pre-acquisition, Then we have post acquisition. Post acquisition. Now, under our retained earnings, according to our approach, please don't let us forget. The approach is very simple. How much is in our retained earnings in the statement of financial position?
600.
600. So we just put that 600 here. Let me put it here. SOFP. Someone was trying to use a Pathfinder solution to solve group back. He was now telling me that he did not understand. I said Pathfinder. And that one they will just scatter. I'm just, when I was writing ICAN, so I don't, my lecturer, please, you just don't look at Pathfinder. You just get the approach. Get the normal approach. When you get the normal approach, then use it. When you use it, you see that you get the same answer. So Pathfinder solution is usually complicated, very, very complicated. So how much is our now additional information one? They give us the pre-acquisition retained earnings of
220.
220, right? Thank
Yes.
you. 220. Okay. Let's go back to our Excel. 220. Now, for us to get the post, so it will be how much? It will be 600 minus 220. So it will be 380, right? Now,
Yes.
for easy way, we need to do this. We need this figure. Abi, if you remember our approach, we need this figure so that now this pre is going to be a DOA rate, right?
Yes.
DOA rate. Now, however, this one is going to be balancing figure. It's going to be balancing figure. It's going to be balancing figure. Abi, maybe that's how we usually do it.
Not average, right?
Not average.
Okay.
The only time we are going to use average, please don't let us forget. The only time we are going to use average rate is P or L. When we have P or L. That is
I
the
saw one
only
question.
time
The post as average. The post as average.
post.
That's what I'm asking. Post acquisition
is-
as
It has average.
yes.
That's Pathfinder. Abi? It means Pathfinder. They can
one question.
scatter your head. They can scatter your head. They can scatter your head. They can
Okay. So
scatter your head. Oh.
okay.
Please don't use average. Oh. It's always
Alright.
in balance. Always in balancing figure. Now, what we need to now do is that now this pre and post, we need to change it. We need to, for us to determine DOC. This DOC. We need to use DOC rate. That post. You know, it's that 600. So
Yeah.
that's 600. What is our DOC rate? 2.5, Abi. So
Yeah.
600. Okay. Let's see. It's this one. Let's do it like this. Sum of these three. Excel and Wala. Sum of this. 1,000, right? Now, when we use 2.5, using DOC rate, what is this one going to give us?
660.
It's going to give us, no, this
Abi, which
1,000
Okay,
divided
DOC.
by 2. Yes. What is it going to give us?
400.
400. Okay. Now, our balancing figure will be, now, 400 divided by 3, it will give us how much? Sorry, excuse me, please.
133.33.
133.33. Now, pre-acquisition, 220 divided by 3. 220 divided by 3.
73.33.
73.33. Okay. Now, what are we going to do? To get our balancing figure, just do like this. This minus this minus this.
Sorry, are
What
we
is it
still
going to do?
we're not putting the OCE before we do this?
Is there OC in the question?
Yes, there's OCE.
Or Soma?
For Soma. Oh, okay. Soma doesn't have. Soma doesn't.
Soma, yeah.
Soma
Let's
doesn't.
look at it very.
Okay.
No. Now there is something. Now, according to the question, what's the average rate?
Average rate is 2.9.
2.9, Abby.
Yes.
It's something I want to try now. Because according to I've seen something like that before. Let's try. Now, 380 divided by 2.90, Abby.
2.9, yeah.
2.9. So now 380 divided by 2.9, what is it going to give us?
$131.03.
So what you saw in Pathfinder is that when you want to get this post acquisition, use average rate. When you use average rate, you can never get this balancing figure. That's what I'm saying. Don't use Pathfinder. Don't use Pathfinder. Don't use Pathfinder. Use this balancing figure. Like in the standard gongon, according to the standard gongon, it's balancing figure. It's not the average rate. So I don't know where they see the average rate. So now we have liability, right? Let's go back to our liability figure. Let's go back to our liability figure. Now we have current liability. We have current liability. Then we have non-current, sorry. We have non-current liability. We have non-current liability. Then we have current liability. So sorry, how much is the non-current liability?
320.
Non-current, Abby?
Yes.
320. Okay. Then current liability. We have
200.
200. If you remember very well, our liability also we use DOA rate, Abby.
Yeah.
DOA rate. What's our DOA rate?
3.
DOA 3. Okay. Is our DOC rate that is 2.5. So now we are done with all of them, Abby. So I think we can use our formula to get them. So this divided by this. So I can copy the formula here. Can copy it here. So we are fine with all those ones. So we can copy the formula here. Now I can also copy the formula here. Imagine. So okay. I think we are fine now. We are done with the first thing we need to do. As we are solving this foreign subsidiary, do you prefer to have foreign subsidiary in the exam?
At least you fetch us small mark when we're translating.
Like when I was doing ICAN, I'm finding it, because you translate, you earn mark. When you do some things, you earn mark.
Yes,
so at least Not those all those soap wahala that is they have problem, eh? Hey, all is well, all is well. Don't worry, it's for the time being. So now we have done our translation, Abby.
Yes.
Now let's consolidate. Let's quickly consolidate. Then we can now move to additional information. Okay. Now, what's the parent company PP? It's PP, right?
740. Yeah, 740.
For parent company, 740. Then
Plus
for
okay, there are two of them. Puta.
Yes, for that one.
220.
220. Now plus
304.
this one that we now translated now 304.
Yes.
Now goodwill, we'll get our goodwill, Abby.
Yes.
Now, apart from goodwill, what's the next item?
Investment.
Other investment or financial investment,
Investment in subsidiaries.
investment in subsidiary. So they gave us the two items. So now let's go. Are we sure we are together? I think it's financial asset too. Okay, investment in subsidiary, then financial assets, right?
For financial assets, yes.
Yes, investment in subsidiary. Now, as I've said earlier, I said we have graduated now. Maybe I said we have graduated. Now,
Yes.
I said we should not be showing investments in our financial statement again.
Yeah.
Let's leave it. Let's just don't be showing financial. So, financial assets. So, what's the financial asset figure?
30
Sorry,
30. Good.
plus
Yes.
14
Okay. I think
plus
somebody is calling my
plus
attention.
yes.
Miss Adiola. Yes, ma'am.
Under the translation, if you want to
Yes.
translate current liabilities, is it DOA or DOC? Because last question that we saw, we used DOC. So
asset and liabilities.
Assets.
I'm
All
confused.
assets.
Use DOA now. That is what I'm asking.
Asset and
Okay, I
liabilities
remember.
they are DOC.
Yes. That assets and liability, they are
Yeah.
DOC at
Yeah.
all time. But I remember that evaluation surplus. When we did that evaluation surplus, that I said that the examiner told us that it has been included. If you remember, and I
Yes.
was saying it in that question that it is because of the examiner now. That is the reason why we are using DOC or DOA in that question. But naturally, it is DOC. The rule, the simple rule is just very straightforward. The simple rule is that at all assets and liability is at DOC rate. Then all equity items is at DOA rate.
Yes.
Then post-acquisition is at balancing figure. Then all POL items are average rate. Shikina.
The question you solved now, you use 3.
So it's one, yes.
Which one? This one,
This is what we are doing, yes.
Non-current liability is 128.
The long current liability. What I use 3, right?
Yes, instead of 2
Like,
points.
Yeah.
We have cooked beans. Thank you for that. We have cooked beans. We have
We will chop it by ourselves.
We'll chop our team by ourselves. So it's 2.5. Well, thank you for that, Jari, Auntie Miriam. Thank you very much. So now it's 2.5. So now we can continue, right?
Yes.
Yeah, let's continue our balance sheet. Now, what's the financial asset of subsidiary?
30 plus 14 plus 40.
Plus 40. The one we translated, right? Yes.
Yes.
Now, we leave 2 lines, Abby. We will leave 2 lines. Always leave 2 lines. Now, in our current assets, like they give us only one figure for current asset now.
Yes.
Abi, they give us one figure
Yes.
for current asset. So let's do what? Let's delete this. Let's leave one line. Then let's leave this current asset. So what's the current assets for parents?
236
Two three
plus 200
plus 200
plus
plus
264.
translated 264. Okay, that's all right.
Yes.
Oh yeah. Now let's move to equity.
Mhm.
Equity.
Share
Now,
capital.
daddy, parent only, right?
Yes.
So we don't have issue about that one. We have parent
400.
only. Now, retained earnings, working note 5. Now, let's quickly do this. Let's please give me the figure of non-current liability.
Not
The
correct.
figure of
It's 112 plus
the non-current liability. Let me leave one line. Okay. Non-current liability 112
plus 84
plus 84 plus
128.
128. Now, I know we are going to delete this and we'll clear this. So let's call this one non-current liability. Now, let's remove this two line because our current liability is one line item, right? So, please, the figure for current liability. So I'm
37
going to, so, okay. Oh yeah, the figure
370 plus 154
370
plus
plus
154
154
plus 80.
plus 80. Okay. Okay, I think we are fine like this. Now let's go. Now. So all I need now is what? I need the equity. Let's quickly construct our group structure. Who is the parent company? Rupaya. Is it Rupaya or Rapuya?
Rapuya.
Rapuya. Seke Bula. Rapuya. all these questions in that kind like this. So now, he purchased who first? He purchased additional
Puta.
information too. The additional information too first.
Okay, information too. Said also on May 1.
Sorry,
20,
additional information 1. Sorry, ma.
okay.
Additional information 1.
On May 1,
So
2016,
yes.
Rapuya acquired 52% of the ordinary shares of Soma Limited.
Thank you, ma. So I need that percentage, 52% of Soma, right?
Yes.
Soma PLC. Okay. Then, oh yeah, the information.
Of ordinary shares of Soma PLC, a foreign subsidiary. The retained earnings of Soma Limited on this day were 220 million DFAs. The fair value of the
okay, fair value
of the identifiable net asset of Soma Limited on May 1, 2016 was 990 million DFAs.
Okay.
The excess of the fair value over the net asset of Soma Limited is due to an increase in the value of non-depreciable land.
No,
Rapuya PLC. Sorry?
Non-depreciable.
Okay.
That's fine, man. Okay. Non-depreciable land, Abby?
Yes.
Non-depreciable land. No. Now, in our translated table, please let's go back to our translated table. How much is the ordinary share? Ordinary share of of Soma. Ordinary share of Soma.
133.33.
I think I can copy here. So as our DOE 133, then as our DOC 133, right?
Yes.
Now, retained earnings, and it is fine like that. I even like it like that. We have pre and we have post. So let me just pick it one after all. So we have pre here,
73.33.
173.33, which is this. Then we have post. So for exam purpose, don't worry about that middle one. It's only in, I think it's only in ACCA. That's when you need that one. You need this figure because they will always set impairment for you. Always set impairment for you. Always set impairment. Every time they will only set impairment for you.
What do you say we don't need?
This figure, this one. This figure. So we have calculated the post. How much is the post? We have this post here. 193.
93.4.
Abi?
Yeah.
So we can put that one here. You can put it here. 193.34 now. 0.34,
Yes.
Abi?
Yes.
Point. So what I'm saying is that this 193.34, for us to get this one we don't need it. For our computation, we don't need it. But in the case of if we need it, what we need to do is just this plus this. You get this one. So that was what I was saying. In case.
Okay.
So yes. Now in this question, I don't think we have. Do we have OCI?
OCE.
I don't think we have OCE. Do we have for Soma?
Yeah.
Or
For parents.
Only parent?
For Puta and Rapuya.
So we don't have OCE, Abi?
For Puta and Rapuya, we have. Well, we don't have for
Puta
Soma.
and Rapuya.
Yes.
So we can delete this, Abi?
Yes.
Now let's go. I think we are fine like this. Now let's go back to additional information one. I think they give us the net asset of Soma. They give us the net asset of Soma. Okay. Let's go back to additional information one.
Okay, so the fair value of the identifiable net asset of Soma Limited on May 1, 2016 was 990 million DFAs.
And the excess of the fair value is due to increase in value of non-depreciable land, Abi?
Yes.
So now let's go like that. So they are giving us net assets as our DOA. How much is it?
990.
So we can see as our date of acquisition, Abi?
Yes.
990 divided by what's the exchange rate as our DOA?
3.
3, Abi, divided by 3. So we can translate this one.
330.
We can translate it. If we translate this one, will be 330, Abi?
Yes.
And immediately we can determine of this, Abi?
Yeah.
Which is this minus this minus this.
123.34.
So 123.34. I don't know. It's giving us. It's not. Let's maintain that figure. So that's our increase in non-depreciable. Now another problem we now have is that anytime we have fair value gain or something, we are going to do what? We are going to determine exchange gain. But let's just leave it for now. Let's leave it. Let's leave it. So if you remember very well, what will be in your DOA must be in your DOC, Abi. Should we remember?
Yes.
Anything we have here must be here. So we are okay like that. And immediately, that figure, we must take it to our PPE, Abi. Did you read? Please don't let us forget to 123.34. So that was those excess. We take it to our working note 2, then we take it to our PPE because it will increase the value of our PPE. So now, any other information they give us, I think they give us information about goodwill. They said NCI value as a DOA. Abi, we have SOMA. We have SOMA first. Now they give us the NCI value as a DOA. What's the NCI value? What's the NCI value as a DOA? In that additional information they give us. In that additional information.
Rapia PLC wishes to use a good method.
Yes.
To consolidate financial statement of SOMA, the fair value of the non-controlling interest in SOMA Limited on May 1, 2016 was 500 million difference.
Abi. Yes. So they gave us 500 divided by as a DOA 3, Abi. So 500 divided by 3. So our NCI fair value at DOA. They give us if we calculate it, what is it going to give us? NCI value at DOA.
166.67.
166.67. So, okay. I think we are fine like this. So, I think we are done with all information on additional information 1. All additional information 1, voila, we are done with it. And that's why I want us to deal with all of them like that. The only thing we are done, they give us in that additional information 1 is what? Is information on functional currency. How to determine the functional currency of this one, of that one. Abi? Maybe that's what they give. That's it. So we are done. Now, I think we can move to additional information. Now, before that, what is the purchase consideration? Purchase consideration. How much did the parents buy a subsidiary? How much did the parents buy subsidiary?
220.
That's 184 for SOMA.
For SOMA, Abi?
Yes, 184.
So I think we need to, so that we know that 184. 184 for SOMA. Now, and we already have our net asset now. Our net asset as a DOA.
Okay, yeah.
Our net asset as a DOA. Maybe we have it already. 330.
Yes.
330, we have it already. So we have our goodwill like that. Now, please don't let us forget goodwill as a DOA. In group accounts, in foreign subsidiary, this goodwill, in as much as we don't have impairment here, this goodwill usually take to SOFP. Abi?
Yes.
This goodwill, we take it to SOFP. But in foreign subsidiary, we don't pick it. Let me read it. Because we will do exchange gain on what? We will do exchange gain on goodwill. Maybe you remember.
Yes.
We will calculate exchange gain on goodwill. So we must not use this one. So one of the additional information we will do is exchange gain on goodwill. Can we deal with that now? I think we can do with that now. Let's make it our working note too. Let's make it our working note too. So that we have done it in here. So exchange gain on goodwill. And this is only in foreign subsidiary we'll be doing that while. Exchange gain on goodwill. So what's our exchange gain on goodwill? Now, what do we usually do? This is what we usually do. This is what we do. What we do, we usually copy this rate now, Abby. We copy this rate so that we'll not do any wahala problem. So let's bring it down like this, right? Now, we now pick goodwill at DOA. So what's our goodwill at DOA? We have calculated that one, right? Which is this 20.67 in Naira, 20.67. So as at acquisition, what's our rate as at acquisition?
3.
3.
3 Abi?
Yes.
3. Now, for us to get this defer back, what do we need to do? We need to multiply, Abi. We need to multiply.
62.01.
62.01. Now, we leave one line. We now pick this goodwill as our DOC. So what's the exchange rate as our DOC?
2.5.
2.5, Abi. So
Yeah.
what will you do? We just copy this one. Goodwill is goodwill. Voila. 62.01. Now we can use Excel now. 62 divided by this. Let's know maybe the goodwill has increased or reduced. So the goodwill has increased, right?
Yes.
Has it increased or reduced?
Increased.
Goodwill is increased, Abi. So we have exchange gain. We have exchange gain. This heading will be gain or loss. Will be gain or loss. Exchange gain. So what will be that exchange gain? It will be this minus this. Right?
Yes.
So our exchange gain on goodwill is 4.13, which is what? Which is attributed to who and who? Parents and subsidiary and NCI, right? Parents and NCI. So it belongs to both of them. It belongs to both of them. So there is additional. Now, when we are deal with that now, so this now, we can take this one here now. We can say exchange. You can take exchange gain, which is it 4.13? Okay. So we can say not equal to is equal to this plus this. So this is the total goodwill. This is the goodwill we are taking to our SOFP now. not that one. But this exchange gain, it will be shared between NCI and parent, abi? Now let's do like this now. Let's insert a column. Let's see. This is Soma. Soma. Share of exchange gain. Share of exchange gain on goodwill. So how much is it? What is the percentage of control in Soma?
52%.
So subsidiary will be how much? Subsidiary will be 48, right?
40. Yes.
Multiplied by 4.13. So we can copy this, then we take it to parent company, because parent company too will collect that share. So we take this, we take it here. But this one is for parent company, you collect 52%, right?
Yes.
So we are done with this now. It's one wahala that we need to, one headache. We have solved one headache like that. So it's one headache like that. We have solved that headache. Now another headache that we now need to do is exchange gain on fair value adjustment. You know, as we said it, that you see this fair value adjustment. Let me show everybody. This non-depreciable land, as a DOA, is different from DOC. Now we need to calculate exchange gain on this non-depreciable land. It's another headache that we need to. Wahala no dey finish. Wahala no dey finish. So that's our additional information 3. Our additional information 3. Let's copy this and paste here. Let's copy all these two and paste here. So it's wahala that we need to do. But this one is exchange gain on non-depreciable but the problem is that the only problem is that it is only in foreign subsidiary we will be doing this. So it's only foreign subsidiary will be doing all this wahala. In normal fellow subsidiary, will not be doing all this wahala. Please, let's take note. In normal, so now that's that non-depreciable asset, how much is it? The one we calculated. Maybe it's this one, 123 abi.
123.34.
So we now take it here in naira. Sorry, I need to face value. Now, as at DOA, what is DOA? 3, right?
Yes.
Now let's convert it. Fair value of non-depreciable land. So when we go back, we will multiply abi this multiplied by this 370. Now we leave one line. We do one line. This is our DOA. This is our DOA. Then we will now copy. Then copy our DOC.
Yeah.
Yes. So what's the rate at DOC?
DOC 25. I just select you.
5, right? Now we already have this, which is in there fast. 370.02. Now let's pick this divided by this. It is only in foreign subsidiary we'll be having that wahala. So we have exchange gain on non-depreciable land. Exchange gain on non-depreciable land. Exchange gain on increase on non-depreciable. Let's do it like that. So is it gain or loss? Maybe it's gain. It has increased at
24.668.
So now this amount, you see, it is a gain.
Yes.
This amount, the accounting entries is that it will increase our PPE, right? It will increase our PPE. You know, this one is goodwill. This one increase our goodwill. So this one is we increase our goodwill, our PPE, which is 24.67 Abi. So we take it to here plus 24.67. Now the second leg is that it's going to be shared between parents and subs and NCI. It is going to be shared between parents and NCI. So that is what we are going to do. So we can now copy this now. Where is our so we can insert another line here. We can now say exchange gain. How much is that figure? 24.67. Am I right? 24.67.
Yes.
But this one is not gain on goodwill. Exchange gain on excess or increase on non-depreciable land. So, and immediately we do that, and I said it that we are using we are using what are we using? Full goodwill method. So anything that is like a gain, it will be shared between this and this. So, but this one we have how many percent? To have 52%. So, so we are done with SOMA. We have done everything that we need to do on SOMA. We are done with it. All is wahala. We are done with all the wahala. Now, yeah, let's go. Additional information 2. So for that, additional information 2. Let's go.
Okay.
Additional information.
So we should not read these other ones on top again. We should just go to 2 straight.
We don't need all those information.
Okay.
We don't need the output of all this one. We don't need it. We don't need it. And the only information we did there, they said there has been no issue of shares and no impairment of goodwill since acquisition. So they don't have impairment. There is no additional issue of shares. So as in our working note 2, the share, ordinary share at DOA and DOC, they will remain the same and there is no impairment. So now let's go.
Also on May 1, 2016, Rapuya PLC had acquired 70% of the equity interest of Puta Limited. The purchase consideration amounted to 226 million naira, which Rapuya PLC paid through bank transfer in compliance with the cashless policy of the federal government of Nigeria. The fair value of the identifiable net assets recognized by Puta Limited was 240 million, excluding the patents below. The identifiable net asset of Puta Limited at May 1, 2016 included a brand which had a fair value of 8 million. This had not been recognized in the financial statement of Puta Limited. The brand is estimated to have a useful life of 4 years. The retained earnings of Puta Limited were 98 million, and other components of equity were 6 million at the date of acquisition. The remaining excess of fair value of the net asset is due to an increase in the value of non-depreciable land. Rapuya Limited wishes to use the full goodwill method in consolidating the financial statement of the subsidiary. The fair value of the non-controlling interest in Puta Limited was 92 million on May 1, 2016. There have been no issue of ordinary shares since acquisition, and goodwill on acquisition is not impaired.
So thank you, ma. So according to this information now, they said Rapuya acquired 70%, Abi.
Yes.
Now, with that information, I think we can consult our group structure. So Rapuya acquired 70%. So we can complete this one, 70% in what
Puta.
is the name of this one? Puta.
Puta.
So you can say this is Puta. You can say Puta is here. Puta PLC is here. So now we have completed the group structure. Now let's move on. Now in our working note 2B, now we can see our 2B is for Puta PLC. Now ordinary shares. Now Mr. Folacha, the ordinary share of Puta in the balance sheet. In the balance sheet, how much is it? Ordinary share of Puta. We'll find that one in the balance sheet.
Puta, 76.
76. So we can put 76 million here. We can put 76 million here. So B minus A will give us C. So now retain earnings. Now give me figures in the balance sheet first. Retain earnings in balance sheet. How much is it?
112.
112.
112.
Okay. What about OC in the balance sheet?
8.
8. Thank you, ma. Now, I think we are fine like that. Now, let's go back to additional information. They said, okay, the purchase consideration amount to 226, right? Now, let's deal with that one too. The purchase consideration. Where is the calculation of our goodwill? Let's insert that 226. 226 million. Now, let's go 226. Now, let's continue. Paid through bank transfer in compliance with federal government policy of cashless policy, right? Now, the fair value of net assets recognized by Puta was 240 million, right? The net asset is 240 million. Let's put that 240 here. They now said as at acquisition 240 million. Now let's go. Excluding the patent below. Can we see? Excluding the patent below. The identifiable net asset of Puta as at 1st May 2016, including grants which had a fair value of 8 million. This had not been recognized. Can you see that there is an error here? They said the identifiable net asset of Puta. The identifiable net asset of Puta is how much? Is
240.
240, excluding the patent below. Now, they are now saying including a brand. So that, when I now check there, I now saw that that brand is an error. That brand is the patent. That brand is not a brand, it's a patent, which had a fair value of 8 million. So that patent is 8 million. These are not being recognized in the financial statement. So that 8 million is not brand, is actually patent. So what are we going to do? We just come here. So I will not cause wahala for ourselves. It is very important. Patent 8 million, because it's not included in this in this calculation. It's not included. It's not included. Let's remember very well. It's not included. Now, what are they now telling us? They now said, they said, okay, these have not been recognized in the financial statement. The brand is estimated to have a useful life of 4 years. Now, help me check from DOA to DOC. From DOA to DOC. From DOA to DOC. How many years is it?
DOA May 2016. DOC April 2017. 1 year.
Only 1 year, Abi. So
Yes.
that patent, when we want to calculate the depreciation is only 1 year. So now let's quickly deal with that. Now, this patent, if you remember, anything that have not been recognized, it will be here, it will be here. This one will be 0, right? Let me copy this formula here. Let me copy it here. Now, patent is an intangible asset. Patent is an intangible asset.
Yeah.
Abi. So intangible assets usually amortize. So there is amortization of what? Of patents. Okay. So that amortization of patents, how do we calculate it? It will be fair value of amortization divided by remaining useful life, Abi, times number of years from DOA to DOC. So we can put it here. So it will be 8 divided by 4, right? Multiplied by 1 year. Multiplied by 1 year. So it will be 2, right?
Yes.
So that it will be 2. So, and since it is 2, so we are going to deduct it. So which ACCA is in my head. Which output do we usually subtract it in this 8, or we use it as a line item?
Come again with the question.
This amortization, you know, we can do it in 2 ways. We can remove this amortization. We can remove it from this 8. Then we remove this. How much is this? 2, Abi?
2,
we can put this
minus 2.
Is this minus 2, Abi? Is this how we usually do it? Because there are so many ways we can. Minus 2, Abi?
Yes.
Okay, yes, okay. Let's do it like that. Let's do it like that. So what we are going to do, since we have recognized these patents here, let's go back to our balance sheet. Now that's why we usually leave 2 lines. So we recognize the patents, intangible assets. So we recognize the 8, right? Then minus 2, which is the amortization. So at the end of the year, this one will be 6. So when we recognize that patent in our financial statements as at, what is the consolidation date? Rapuya Abi? Rapuya. Is it Rapuya Group? What is the consolidation date? May 31st Abi? Is it May?
April 30th, 2017.
Okay, 30th April 2017. Okay. So this is we have recognized this one now. Let me read it so that we remember that it is an adjustment. This is an adjustment. Anything I read is an adjustment. When we are solving on our own, you cannot just be, because I remember that time when I was writing my ICAN, paper was too much, 5 papers. So when I am now reading 2 weeks to exam, I'll now be, where did they see this figure? Where did my lecturer see this 34 points? Where did they see this one? So I always remember at that time it will be very difficult. So I just said I will now be signifying that all these red do their adjustments. So when we go back to our additional information, we will know that it is an adjustment. Those one in blue are picked from there. So we are done with that now. They now said what? They said, okay, the brand has a remaining useful life of 4 years. We have dealt with that one. The retained earnings and OCE, okay, 98 and 6. So as at the date of acquisition, they said retained earning was 98. Then this one is 6, right? So we can get our post immediately like that. We can get our post. So now, let's continue with our information. They said the remaining excess fair value is due to an increase in non-depreciable land. Can we see? This one too has non-depreciable land. So if you look at it, you will see that this is the first time I'm doing this. All of the time that we usually do, we usually put this figure. We usually put it last, Abby, if you remember very well. But now, you see that I've changed it. It is because this patent was not included. The patent was not included in that 240. And that's the reason why we need to separate it. So all we need now, this is the one that will go to. And that's the reason why I usually remember my lecturer. My lecturer is say, before you can say you can solve examination question, before you can tackle exam question, you need to solve so many questions. Because I don't think we have done this we have done things like this before. Have we done this thing like this before? No. So immediately, let's now assume we are now in exam mode. It will now be like background. And I see this issue. The issue is ICAN. The solution that they provide for us is usually ambiguous. If not because of that, if not by the grace of God, after our ICAN, I will introduce you. If you have the time, please go and do a CCA. Even though it is diploma in IFRS, which is International Financial Reporting, if you see solution of CCA, in fact, you don't even need class. You don't need class. You can sit down on your own. Once you understand principle, you will get the solution neat, very straightforward, very detailed. For our own pathfinder, if you don't understand principle very well, you cannot carry pathfinder. I usually say it everywhere. You cannot carry pathfinder because the solution they will give you, I don't even know where they will bring it from. I don't know. All is good. So they said this is not depreciable land, Abby. This is excess of non-depreciable land. So we are not calculating depreciation. Thank God. So how much is this? Let's get this figure.
60.
This 240 minus this. Sorry. 240 minus this. Minus this. minus this. So it's 60. So, and if you remember very well, and that's the reason why I did not put this patent here. If I put this patent here, voila will come. So this 60, if you remember, it will go to this place. If you take this 60, we take it here. Then this one will be B minus A. So that one too will be new. Right? What is this one now? Exam and voila. Let's just put 60 here. Okay. So we don't actually need this figure. It's only when we are calculating impairment, we need this figure. But when you are not calculating impairment, please, you don't need this figure. You don't need it. You don't need it. So that's that one. So now I think we are almost done. Let's finish up with 4. So it's 0, right? Okay. This non-depreciable land, please don't let us forget. We are taking it to our solution page, Abby. We are taking it to increase our assets. We are taking it there. So we are done with that. We are done with all these figures. So we can pick these 248. So what's our NCI value as our DA? Did the examiner give us? I think so. So we are probably to use full goodwill method, Abby. And the fair value of NCI is 92 million. There have been no issue of ordinary share with acquisition, and goodwill is not impaired, Abby. So we are fine. We are fine. What is this? What is the time? 6:45. So, okay. NCI and DOE is 92 million, right? 92 million. So we can get our purchase consideration. So when we get our purchase consideration, we can, our net asset as at DOE. I think we have it now. What's our net asset as at DOE? Fair value of net asset as at DOE is 248, right?
How do you get that 93?
Is 248. Maybe we saw it, this one. 248. So our goodwill is 71. So our goodwill is
What of the
71.
okay 500?
Our goodwill is 71. So our total goodwill, you remember, this is 2 foreign subsidiary. This is 2 foreign subsidiary. So we can get our total goodwill. It will be this, sorry, this plus this. This is supposed to be here. So our total goodwill is this. Here's our answer now. Well, that's a wow. So these are our total goodwill. These are our total goodwill. So I can take my goodwill to my solution page. So that's our goodwill. So what do we have again? Hello. Is Afalashadi?
Yes. I'm
Are
here.
we here?
Yeah, I'm here.
What happened to my device?
I can hear you.
Yeah.
Can you hear me? Hello?
I can hear you. He's not hearing us.
Okay, he's the one not hearing. Okay.
Yes.
Okay, I can hear you. Yes, I can hear you now. Yes, I can hear you now.
No wonder. How do you get the 93, the NCI?
It was given in the question, though.
Okay.
It was given in the question. The NCI was given in the question.
It's
Yes, they
90.
said it's 92, Abi. It's not
Yes,
93. 90.
it's 90.
Yeah, sorry. 92. NCI. So I can change it to 92. So, okay. Our goodwill is 70. And since I linked it, it will be correct. It will be correct. It will be correct. It will be correct. So now, I think we are done with additional information.
God.
Abby,
Yes.
we are done with all the additional information. All the additional information have been solved. Yes. So now let's balance our account and let's balance of our account.
Yes.
Now, NCI value at DOA. Now, share of let's deal with share of profit. So there's something I said last time. I want us to take into consideration. Please. Now, these are post-acquisition profit. It is always better. I learned this in ECC and it will make our life easy. This post-acquisition profit, 14 plus 2 minus 2. You see, it is always better. Please, it is always better to separate it. We can find a space. Let's just we will split it into retained earnings and OCE. It will make our life easy.
Which one, sir?
Make this our post-acquisition.
Yes.
Let's always split it to our retained earnings and OCE. Now, our retained earnings, we have 14. Then we have amortization of patent, Abi. So both of them, 14 minus 2 is 12, right? So retained
Yes.
earnings will be 12. Then OCE will be 2. Why? Because it will make life easy for us when we are calculating working note, additional, I said working note 4 and 5. You see this calculation of NCI. You see this calculation of NCI and this working note 5. If you are not very careful, you will take one for one. But if you remember this when you split this figure very well, life will be easy for us here. Now, this is what I'm saying. We have done with this. We are done with this. Now, this share of profit. Share of profit. Now, in Soma, in Puta, we don't have a problem. Do we have a problem in we don't have that problem in Soma because the only post-acquisition retained earnings is 193.34 Abi. We don't
Yes.
have that problem. It's only in Puta that we have that problem. So we can come to now NCI, share of post-acquisition profit. We have Puta, and we have Soma. NCI, we are dealing with NCI. What's the percentage in Puta? Is it 70 or 80? 70 Abi.
70.
70.
So this one will be 30.
30.
But in Soma, this
40.
one is
48.
48. So this is now for Puta now. What is the retained earnings of the subsidiary? 12 Abi.
Oh, yes.
You know this is it. That's why I said we should always be splitting. This is 12 Abi. So we can say 30% of 12. 30% of 12. %30 of 12. Now, in Soma, we don't have that problem in Soma, Abi. Abi, do we have that problem?
No.
No.
Now, what is the retained earnings of 193.34, Abi?
193.7.
193.34.
34.
0.34. So it is very, very easy for us here. Now, now this is SOMA. 30% of 12 is how much?
3.6.
3.6, Abby.
Yes.
3.6. Now, in PUTA, okay, this is PUTA. This is PUTA. Let's take it here. Now, 48%. Sorry, let me use 0.48 multiplied by 193.34.
22.6.
So this is, so we have solved that. So we have dealt with those two like that. Now, we now have post-acquisition OC. You know, we have OC. This OC. Who has OC? Shebi is only PUTA.
Yes.
There is only OC. So how much is the OC? 2, Abby? So we now see post. This thing is usually problem. So if you are not very careful, you just go and put 1 for 1. So 30% of 2, it will give us how much?
0.6.
0.6. So that is about that. Now we can now deal with this and this. Exchange gain. Subsidiary has 0.48 multiplied by, what is that? 4.13, Abby?
Yes.
Which is 2. Exchange gain. Maybe it's 4.13, yes. 48%. Then this one would be,
you approximate it to 1 second.
yes, I will approximate it.
No, you already approximate it. As me not approximate it is 1.98.
1.98.
Yes.
You can open it up. You can open it up so that it will show. The decimal point will show.
I'll open. Yeah, I'll open it up. It's something. It will show. Abby, it has been settled now. So that's about NCI. We are done with NCI. So what's the NCI value at DOE? I think we can copy and paste this one. Abby, these are the two now. You can copy and paste it. So I think all this figure now is 273.30. So we can open it up. This one will be. Then this one, are we correct? 96.2. So I can open this one too. Right? So we are fine with NCI now. So let's determine our total NCI. So our total NCI will be this. Let's calculate by ourselves first before. So this is 92. This is 3.6, and this is. So when we add them together, it gives us 96.2. So why is it this one now giving us another figure? So this one is correct now. So we are done with NCI. Now postal OCE. Retained earnings. So what we did here, I think we can copy and paste here, right? I think we can copy here. You can do copy and paste here. You can just paste them here. So what we need to do is just change our figure. So post-acquisition retained earnings for Buta, this one will be 70, right? Then for Soma, this one will be 52. This one will be 72, 52. Then post-acquisition OC, we will remove it because OC has its own working note separately. So we can create. So what's the parent company OC? Sorry, ma. Parent company OC. Parent company OC.
I'm with you, please.
Yes, ma'am. What's the parent company OC in the question?
That's what I want to check.
Okay, ma'am. Thank you.
Parent company OC is 14.
14
14.
Abi.
Yes.
Yes.
So multiply by 2. 14. So we can open these two up. So this plus this plus that. So we are done with that one like that. So what's the parent company retained earnings?
604.
Okay, 604. Now exchange gain. Thank God we have done all this while before. 52 multiplied by 4.13. Then this one is equal to 0.52 multiplied by 24.67. Now, share of acquisition for Puta. This is
0.7 times 12.
0.7 multiplied by 12. That's 8. Then we have the last one, which is Soma retained earnings, which is equal to. Who's calling me? So I need to. Sorry, let me pick this call. Hello, others. Mark me important. I think for me few minutes. Mark me important. All right. Okay. So sorry, apologies. I need to pick that call. I was expecting that call before. So I think we are done, right? Okay, 52%, 0.52 multiplied by 193.34. So okay, 7. So we can open up all this now. So we are done with all the additional information. So now let's balance our book. Let's balance our book. Let's balance our book. Our financial assets, we don't have any working now. We don't have any adjustment, right?
Yes.
We don't have any adjustment. 30 plus 14 plus 40, 84. Now this, I think, is something I can do here. Is equal to let me just I'll do to make this thing easy. So so I think it's fine like this. So there's no need to call figure for me. I found a way to make this thing very easy for us. So current asset does not have any adjustment, right? So this one I can see 236 plus 20 plus 264. So 520. Current asset. Do we have any adjustment on current assets? No. We don't have any adjustment on current assets. Don't have any adjustment on current assets. So okay, now let's go. Now total current assets will be this. So we can get this. Now equity, ordinary share, parent only. So what's the ordinary share of parent only? Parents, sorry, ma. Within any
Ordinary share 400.
of parent company, 400 Abby.
Yeah.
Okay, 400. Now,
400 or 316.
Ah,
Share
or
capital.
parent company.
Sorry, 316. Oh, sorry. I was calling Roma.
Yes,
316.
thank you. Thank you, ma. It happens like that. 316, right?
Yes.
Okay, we are fine at that. Now, NCI. NCI fair value. Okay. NCI. Okay. Now, non-current liability. Our non-current liability is 112 plus 84 plus 128. Then this one will be 370 plus 154 plus 80. So 604. So total liability. Okay, let's just remove this. Let's remove this. Let's remove this also. So we can see our total equity plus current liability plus non-current liability. So it will be 2357. So there is an adjustment we have not done. There is an adjustment we have not done. Maybe we have done all the additional information, right? Have
Yes.
we done all the additional? Yes. So there is additional something we have not done. So where is it? Where is it? Where is it? Okay. We are going to find it. Look at the current asset. What's the current asset of parent company? 236.
236.
For subsidiary, we wrote 20 instead of 200. Can we see where the error comes from?
It's 200.
It's 200.
Yes.
So this is 200. It's not 20. So our account is 2,357. Now it's now balanced. But please don't forget to, in the exam, don't balance your account to. As I'm telling you like this, that's how my lecturer will be there. Don't balance your account to, because you just do your workings, do your additional information and the likes. Just forget, because your account balance does not earn you mark. Do you know? If your account balance, they can just give you 1 mark here. Out of 25 marks, you now get 1 mark. Is that an achievement? But when you do all your calculation, all these figures, they are correct. Even though one of them is wrong. So you can get 23, you can get 24, than wasting time to balance your account. So in the exam one, don't balance your account, please. In the class, our account will be balanced. We will find solution. When in the exam, please don't balance your account. Don't balance your account. So, and again, please don't let us use question number 1 as the number 1 question we will solve in the exam, except if you have solved that question before. if you have solved that question before and you are sure that this is a question, I can't repeat question, which is somehow impossible, you can now solve question number 1. But it is not advisable to solve question number 1. Solve section C part and the likes. So that is it.
Please
That's
scroll up. Can you scroll up? Let me see something.
okay. In this balance sheet.
Okay, 700 plus 165.
Okay. So you are doing it already. Voila. Yeah. No voila. So all is well. So we are done with the question. So we are done with the foreign subsidiary. So by next week we move to group cash flow by the grace of God. So
Okay.
thank you very much, everybody.
Thank you.
Thank you.
You are welcome. You are welcome.